Howdy folks, welcome to the Daily Coin. My name is Rory and today is Thursday, September the 7th, 2017. And I am very happy to have returning guest Louis Cammarosano from smallgold.com. Louis, what's going on?
How are you, sir?
I'm doing well. I'm glad you're here. We got a lot to cover and I think that it's going to be shiny gold time.
All right, well, let's get at it.
I wanted to talk about gold. That's what I wanted to talk about. And I just found this article and I want to get into some of your numbers, Louis, that you just recently brought to the table with the Gold Eagles. And I think you've got some info on the Perth Mint and some of the coin sales. But I wanted to throw this out because you and I discussed this about a year ago. And it's the transference of gold from Russia to China. And this article that was released on Sputnik earlier this morning, which I've got republished over at the Daily Coin, they're talking about that. This is a follow-up. And Peter Koenig, who is a former World Bank staff member, and he's a current economist and geopolitical analyst, did this interview where he's talking about what's actually happening. And he brings to the table Saddam Hussein, and what he tried to, when Saddam Hussein said that he was going to stop taking dollars and he's going to you now have to bring me euros for oil. Well, we know what happened there. Gaddafi had similar ideas. Iran, similar ideas, but Gaddafi's dead. Iran is now, they have nuclear weapons and we can't allow that and all this nonsense. But what I wanted to say is the Sberbank, the largest bank in Russia, Sberbank, Sberbank, they already have transferred 200 kilos, 440 pounds of gold bars to Chinese financial institutions, which means they don't have to report it to the IMF. So this is, in essence, kind of off book. They're also, the remainder of this year, they plan on transferring an additional 3 to 5 tons. So that's another ton and a half for each of the remaining 4 months. Next year, they expect to deliver to China up to, quote, 10 to 15 tons, and perhaps we will even exceed this figure, end quote. And that's from Igor Bulanstev, who is the head of the investment division of Sberbank. And that's what he's saying. What I am curious if this is in addition to the 100 tons, up to 100 tons that you and I reported last year. And it doesn't make mention of that in this article.
Okay, so let's catch everyone up on Russia and Chinese gold. Russia is either the second or third largest producer of gold. They produce about 270 to 300 tons of gold a year. For the last 3 years, well, this year included, in 2015, they added 200 tons of those gold mined to the Federation, the central bank of the Federation of Russia's reserves. Last year, they added 199 tons. This year, they're on pace to do about the same. So basically, they take about 2/3 or upwards of more than 2/3 of their domestically mined gold and they put it into reserves. And that gives them a very healthy position. They now are in 6th place amongst gold holding nations in terms of what their central banks have, not how much gold is in the respective countries. So Russia has about almost 1,800 tons of gold, less than that. And the People's Bank of China only has about 1,840 tons. So Russia is adding its domestically mined gold to its reserves. Kazakhstan is doing the same. So the gold producers on the Silk Road in the east are definitely taking their domestically mined gold and putting it into their reserves. Now, Kazakhstan, Russia, they do have some excess gold that they don't necessarily believe is prudent to add to the reserves, and that they can make a trade surplus, at least with respect to selling that gold. So they do that. And Russia has an incentive to sell gold to China as a trading partner, and they can either do it as a barter or they can just simply sell the gold. And so they did make that arrangement last year. And I think this is part of the same thing, because there is a limit to how much gold Russia has. They probably have an additional 50 to 70, 80 tons a year to deal with on the free market. And it seems like China has already claimed dibs on that gold.
That's what it sounds like.
Yeah.
And what I find interesting is that it's going bank to bank.
Yes, they put in the bank, and then it goes from the Russian bank, and then they'll put it into the Chinese system. So it becomes part of, and that's no surprise, Roy, because even the central banks, the Fed is a different type of central bank. It's the only one that's a private bank. All the other central banks are owned by the countries themselves. So, for example, the German Bundesbank is owned by Germany. They have gold as part of the reserves. France does. Italy does. All the central banks, every major central bank has gold as a reserve. So gold is part of the banking system, even though they try to pretend it's not, even though they try to pretend they're not interested in it. The only countries that are adding gold to the reserves are ones that appear to be on the periphery, like Turkey, Russia, People's Bank of China, Kazakhstan. Those are the only countries that central banks are adding gold. Someone sent me a note. I didn't notice this, but Indonesia has added a bit of gold. There's some other smaller central banks that add gold. But the major Western central banks, Italy, France, United States, Germany, Austria, Netherlands, Belgium, some of those banks make a big deal about repatriating their gold, but they never talk about adding gold. But they still have it. And now England and the Bank of England and the Swiss National Bank have actually lost gold over the last 20 years or so. But still, they own it. They have it. So gold is part of the banking system, but only the Eastern banks and some of the gold producers are taking that gold and adding it to the reserves. Now, Australia is either the second or third largest gold producer, and they don't add any to their own central bank. Where do you think that goes, that gold?
Good question.
China, right? So the gold producers, if they're along the Silk Road, they seem to either add it to their own reserves, like Kazakhstan and Russia, and then they sell the excess mostly to China.
Well, China seems to be hoovering up any speck of gold that's just floating around out there. I mean, whatever gold they can get their hands on, they're going to take it. And even to the point of, putting, I think, $100 million equivalent in AIIB's gold fund in order to purchase gold mines, which they've already taken controlling interest in at least 2 mines, if not more. But I know 2 for sure.
Now, if you look at China, they're the number one gold producer. We didn't mention that. And they produce upwards of 450 to 500 tons of gold a year. And they import massive amounts through Hong Kong. And yet, the People's Bank of China only has 1,843 tons officially listed on the reserves. And they haven't added gold to the reserves since October. That leads a lot of people to believe that China is lying. And no, it doesn't. It just means that the People's Bank of China is not where China keeps all of its gold. Obviously, when you mine 450 tons of gold a year, you quickly get over 2,000 tons, and the People's Bank of China doesn't list that. Obviously, when you import hundreds of tons a year through Hong Kong and you trade all that gold on the Shanghai Gold Exchange, there's more gold in China. It's just not on the People's Bank of China's balance sheet. And that makes sense. I mean, why would you keep all your eggs in one basket? The People's Bank of China is just outwardly facing, part of the IMF. They don't need to have. Look, England has only 200, I think 300 some odd tons of gold. They're part of the SDR, and they don't need to have 1,000 tons of gold to be a participant. So if the Western banking systems don't require massive tonnage of gold, why would China keep their gold in their Western-facing central bank, the People's Bank of China? So they don't.
Right. Well, they have all the SAFE, the SAFE accounts that that quite a bit of the gold is going into. I mean, they've admitted that they don't have to report what's going into it, and so they don't.
Right.
And why would
They
you?
also
I mean,
and they also have and they've also have if you look at the People's Bank of China structure, there's other banks underneath it in which the People's
yes,
Bank of China either has 100% ownership or partial ownership. You can bet there's gold held in those banks. And if the People's Bank of China wanted to roll that up for whatever reason into their accounts, they could, but why would they? And I'm sure there's sovereign wealth funds that have tons of gold literally in their accounts that are in China. There's individuals. So the whole idea of looking at the People's Bank of China and using that as a proxy for China's gold is it's kind of ridiculous
yes,
because that's not where all the gold is.
right.
It doesn't mean
And,
they're lying. It just means you ask them, how much does the People's Bank of China have? They say we have 1,843 tons. And people say they're lying. No, that's what they have. There's gold elsewhere. It's just like, let me give you an example. The Royal Bank of India lists 558 tons of gold. Do you think that's all the gold in India?
oh no, the people
Of
have
course.
upwards of 20,000 tons
And the
estimated.
temples too. And the temples
Yes,
too. And it's just like China. There's other places where there's gold in China. So for whatever reason, there's been this meme that somehow China's lying. Why don't we say India's lying? Because they only list 558 tons. Well, it's the same thing. It's the Royal Bank of India, it's the Central Bank of India, and the Central Bank of China are not the only places where those two respective countries keep their gold.
pretty simple.
Yeah.
Yeah,
Same with Russia. Russia's, I'm sure, has gold other than what the Central Bank of Russia has. Just like the United States. Maybe not. I think that if no,
we have dust.
even if the United States has all the gold that it says it has in Fort Knox and the other places, I would think that those amounts would be greater than all the other gold that might exist in the country in private hands. Because you'd be talking, you'd be talking about 8,100 tons. I don't think that private citizens and private investors have 8,100 tons in the United States. Because in India, they claim that there's 18,000 tons among citizens, but you're talking about 1 billion citizens and people that actually buy and, they save in gold. Americans. But look, we can get into it right now. American Gold Eagle sales is basically where Americans would have their physical gold, correct?
A lot of it, I would say, probably a significant.
Okay, when you
portion.
sell, when you really rarely sell over 1 million ounces a year, you're never going to get to the type of tonnage that we're talking about. When you sell 6,500 American 1 ounce gold eagles like they did in August, that's not a significant amount. So it's nowhere near the amount. So what I'm saying is the United States gold, if it does exist in massive quantities, it was confiscated. It's in the U.S. vault. It's not in American citizens' hands.
Well, that's
true.
The
bulk of private citizen hand gold is definitely in India and in China. It's not in the United States.
Yeah, and that's why they keep trying to scheme ways to get it out of their hands in India because they want it. But, gold is just a barbarous relic and it's a pet rock and it doesn't matter. Yeah, but we want all you've got.
Yeah, and they also, I'm going to try to smuggle a pet rock one day and I'm sure I can get through.
Yeah, exactly. And that's what you could tell them. You could tell the customs border agent, this is my pet rock.
Yeah, I actually have pet rocks, from the old days, and I'm sure they wouldn't give you trouble if you try to import that somewhere.
Oh, yeah, and you had reported, I think it was yesterday, on the American Gold Eagle sales, and one of the things that I've reported on as well a couple months ago was the half-ounce American Gold Eagle. That's one that I'm keeping an eye on because it looks like that's going to be that this year will be the lowest minted number of coins in the history of American Gold Eagle coins and of this new program that started in 1986.
For half-ounce sizes.
Yes, for the half-ounce size. And that would be, and you sent me an email with some of the premiums on some of the other lower mintage years that were they were incredible, and that's what I foresee happening. Because right now they stand at 29,000 total number of coins, and if they sell another 5,000, which is what I'm calling for by the end of the year, that would be a miracle, and that would put them at around 34,000 total number of coins, or about 5,000 coins fewer than, what was it, 2001? No, I can't remember the date, but there were only 39,000 half ounce American Gold Eagles minted. So, and the premiums on those, I believe, were pretty substantial at this point.
Yeah, well, you're making the point, however, that once you start talking about a very common coin, the American Gold Eagle half ounce, selling in such small quantities, that we're looking at gold having numismatic value rather than the bullion value. And, that's just the state of play now in the West. And the other thing I think we should touch on is it doesn't mean that gold, interest in gold as an investment has gone down. I think it means that gold as an investment is now taking different forms than the physical form. It's a lot, I sent you a chart. You could probably pull it up on the gold inflow supposedly into the ETFs.
Right.
And ETFs are taking up a major part of the American gold demand from institutional investors. They don't go out and buy American Gold Eagles. They certainly aren't buying those half ounce American Gold Eagles. Those are now, it looks like what's happening, especially in the gold market, less so in the silver, that the gold investment is taking the form of ETFs. There's always been the futures trading on COMEX, and now also gold money and some of these digitized gold coin offerings. That seems to be where the gold dollars are going, as opposed to people buying the actual. Now, that's at least the last 6-7 months. We've seen horrendous American Gold Eagle sales across the board. Now, that's not happening at the Perth Mint. The Perth Mint has had some decent numbers. They're not spectacular, but they don't show this type of decline down to just selling a pittance. I think last month it was 12,000 1 ounce size. This month, the last August, was 6,500. They sold just 3,000 1 ounce American Gold Buffalo coins in August. So you're looking at non-existent U.S. Mint gold sales where 6, 7, 8 months ago, they were pretty strong.
Yeah, pretty robust.
But even when they're robust, the U.S. Mint rarely sells over 1 million ounces of gold a year, which is not really that much in the grand scheme of things. But now they're selling even less. But that doesn't mean there's less investment in gold, because the gold inflows, people are using ETFs to buy gold. Now, the problem everyone should be aware of with an ETF is if the stock market's closed down, you can't get at even the value that you supposedly have in the gold. Forget ever even getting physical delivery of that gold. Most of the gold ETFs never give it to you. But the reason you hold gold supposedly is not for price exposure, but is in the event if there is some type of event. Well, and usually in some type of event, they close the stock market.
Right.
Well, you can't get the value of your gold at that point because the stock market goes. Also on the weekend, even if there's no big emergency, you're shut down. You can't get the value of that gold. So it seems odd that that's taken the place. I would think that institutional investors should feel more comfortable using one of these services like Gold Money or some of the vaulting services where they can actually make a big purchase and have it put in Singapore or Switzerland, a place where you can have a vaulted, insured pile of gold that's outside the banking system. So when there is an emergency in the banking system, you can trade it, you can use it. But that doesn't seem to be where the money's flowing. And if you think about it, look at these low gold sales the last 6 months. But what has the price of gold done during that time period? It's risen, which highlights another point I like to make is that physical gold demand, not just at the U.S. Mint, or physical silver demand at the U.S. Mint, doesn't drive the gold price. And even physical gold demand in India and China doesn't drive the gold price yet. Because if you remember 2015, you and I used to talk and be amazed at the amounts of physical silver sales at the U.S. Mint, physical silver sales, record sales at the Canadian Mint, the Austrian Mint, at the Perth Mint, all this massive amount of silver being sold. And then we looked at the Indian silver sales. They were huge. They were the largest ever.
Yes.
And the price of silver dropped the entire year in 2015. Right. And so physical demand just follows where the paper trading is going. And the smart buyers thought, okay, if they're going to drive the price down by sentiment and short selling, well, we're going to buy physical gold. But you would think that that physical gold buying and physical gold selling would drive the price. It doesn't. And that's what's really strange. Although what does seem to drive the gold price is if you look at that chart I sent you on the gold ETFs,
Yep.
when the flows of gold into those ETFs go higher, the price rises. I don't know if it's a direct correlation or causation, but you do see it, that when the price of gold was falling, there were outflows in those gold ETFs. And then you see at the beginning of 2016 to the middle of 2016, big inflows into the gold ETFs, and you see a big price increase. And then you see that price decrease from the second half of last year. We lost the price of gold down into the election. You see the gold outflows. And now you see it ticking up again. So that seems to be what drives the price, that and the futures markets, rather than massive Chinese or Indian gold demand or U.S. Mint, Canadian Mint, Perth Mint, or all the other sovereign mint demand. And then you see the reverse happen, is that as the price rises in the paper markets, the Chinese and the Indians slow their buying. It makes sense. The price is expensive, so they don't buy as much.
Yeah, and I've got that chart pulled up, and it's in the it'll be in the video also. The one thing that I always come back to on these paper gold markets and ETFs, I would put in there. There's
definitely,
if you can't get to it, and most of I shouldn't say that, but I know that some of the contracts say you can't get the gold unless you have X number of investment in it, baskets, whatever they call it.
That's GLD, and it's a massive amount. And I've heard even if you do have that, there's been anecdotal evidence they won't let you get it anyway.
Right, and so the ETFs, in my opinion, are nothing more than exposure to the price of gold. Has nothing to do with physical gold. If you want physical gold, go out and go to your local coin dealer, contact SD Bullion, one of these avenues, get it in your hand. That's
well, the prospectus actually says that these are designed to give you exposure to the price of gold. Right. They don't say this is a way of buying gold. But you see, that's what people are satisfied with.
Right.
Because the reason they actually, no matter, so many people claim why they own gold. If they really wanted it as insurance, then this doesn't cover it. Because what they really want, what a lot of people want when they buy gold, is they want to get rich. They want the price to go up. And they figure, well, the price is going to go up. I might as well just trade it through an ETF because when it hits my target, I push a button and they send me my dollars and I'm rich. That's the mentality of why people buy ETFs.
Yes.
Because even people who claim to be silver bugs, gold bugs, and have quickly abandoned that to buy cryptocurrencies, not to get off on that tangent, is because really what they want is to become rich.
Yes.
They bought into the idea of these stories of gold 50,000, silver 16-to-1 ratio means silver should be $500, gold to the moon, silver to the moon. That's why they're in it. Well, if that's why you're in it, and it's not for insurance, it's not to have a tangible asset, then you might as well buy the ETF, because if it does go to 50,000 or it does go to 16-to-1 and $500, your SLV and your GLD will give you your riches. That means you're not buying it for insurance. You're buying it no different than if you were buying a speculative penny stock or a cryptocurrency.
Yes,
and that's why many people have moved over to cryptocurrencies, because you can get that speculative boost.
Yep. You got the casino. Here's the casino, and the casino right now, the house is losing. So I'm winning. I'm getting rich.
They have casinoized the gold and silver by making them into ETFs. They brought them into the banking system. And basically, when they've done two things. When you make gold trading the bulk of the notional dollar amount in paper derivatives on COMEX or ETFs, you've destroyed the actual physical market.
Right.
So those things control the price. And then, and in one way, it is rational that if you're interested in price exposure, why would you have physical gold and have the nuisance of holding it if all you want is the gain in the price?
Yeah, no sense in me taking responsibility for myself and my life.
Right. Exactly. Why lug your pound of gold down to and try to negotiate a price when all you have to do is press a button?
Yeah,
so that makes sense.
Yeah, I mean, I'd much rather have somebody else controlling my life than myself. It's worked
Well,
out so well throughout history.
exactly. But you see, you're rewarded for these on-grid assets. They make it enticing. It goes to the point you made the other day that if they can distract you with a way of making your life supposedly easier and it helps them, then most people are going to do it
Yes,
without realizing the consequences.
right. Well, there are no consequences because I'm rich.
Correct. And I got rich buying an ETF. I
So
got rich buying Bitcoin. I got rich, whatever it is.
whatever it is, whatever the latest get rich quick scheme is, that's what it is. So, but the physical gold, I mean, right now the markets are in an upswing, which is really good. It's getting a lot more attention, and I always get concerned whenever Goldman Sachs comes on board and says gold is good, whatever they say is good and is a buy. That's terrifying. Those are terrifying words to me.
It's Muppet time, right?
Exactly. It's exactly it. So I'm a little concerned as to what's going on with that because I really have no trust in them. And whenever Goldman Sachs comes out and starts talking about gold, I get very, very concerned
They're
because of
looking
their
at it as a
history.
trade. They're looking at it as a trade, and the trade is in GLD or SLV. And it's a trade right now that they're putting on because of supposed Korean issues. It's got nothing to do with fundamentals or the supply demand dynamic. It has to do with there's a momentum, the chart looks good, and gold just happens to have a good chart right now.
Well, hopefully they're not going to get in there and wreck it because
That's what they do. I mean, the difference
yes,
here is that every price rise has been met with, I'm just, we can count, we should take a poll. Is it going to happen today, next week, 2 weeks from now? When is the next major smashdown going to happen? Where someone just decides to sell $2 billion worth of notional contracts on the COMEX, whatever they try, the Globex at 2 a.m.
right. It's
And
coming.
remember, this isn't being driven by U.S. Mint sales because they're down.
It's not being driven, like you said, by any of the fundamentals. It's not being driven by any of the geopolitical. They can say, yeah, it's because of Korea. That's nonsense. I mean, what about Syria? What about all the turmoil that's in Washington D.C. with just the list just goes on and on. I mean, there's
What about
100
all
reasons.
of the QE around the world? If you think about why gold originally rose in 2000 after the financial crisis, because the U.S. did QE. Okay.
Right.
Since the U.S. did QE, U.S. continued to do QE. Japan jumped on the bandwagon. ECB jumped on the bandwagon. Swiss National Bank started printing money and buying shares. So the amount of additional dollars and currency that's just been created out of thin air is far greater than it was in 2011, and yet the gold price is lower.
It's unbelievable.
So none of this makes any sense. None of it's based on debt to gold ratios. None of it's based on the money supply to gold ratios. None of it's based on the physical supply demand to gold. It's just based on where the sentiment goes and where they're going to push the price and when they're going to move it back and forth.
I would say it's not even based on sentiment. I would say that the fact that these criminals get in there and push buttons and pull levers, they create the sentiment.
Well, there you go.
By doing whatever, by putting the price wherever they want to. But that game has got to come to an end, and it will come to an end. And where this conversation started with Russia and China moving gold back and forth between each other, creating their own market with gold. They're not doing these things because they see, blue skies on the horizon. They are doing these things in order to create a realistic balance sheet within their economies so that they can de-dollarize, so that they can announce at some point, hey, we're done. We got the gold. Gold is now this much money, and here's the actual value. And if you want it, that's what it's going to be. If you want to do trade, I mean, just like with the announcement that they are progressing towards a gold-backed oil contract. I mean, that's China telling the world you should be preparing because things are going to change. They're not changing today, but they're going to change.
Well, I think with that gold, first of all, the story, I'm sure they're going to do a yuan-based oil contract. They already have a yuan-based gold contract, so it makes sense to denominate stuff in yuan makes total sense.
Yes.
But what I'm confused about is then they say, well, it's convertible into gold. Well, once you buy a contract or once you sell your oil, whatever proceeds you receive, you're free to buy gold with no matter what. That's why I don't understand what the big attraction here is, because once you've bought your denominated yuan gold, once you've done that transaction, they're saying, well, now you can go to the Shanghai Gold Exchange and convert that into gold. Well, of course you can. You don't have to, but it's not even like the yuan is backing it. It's not like China is backing it. It's basic. From what I understand, the way they've set it up is that you can go ahead and do that. Now, someone could do that today if they were to buy oil and get dollars for it. They can immediately take the dollars that they received, and instead of now saying, well, I need to have more dollars, so I need to put them into treasuries to hold on to when I need to spend dollars, they could easily put them into gold. And that's what I don't see happening. We don't see countries adding to their gold reserves, at least that we hear about, because you could easily you could sell oil, and there's nothing stopping you from taking your dollars and swapping that into gold on the Shanghai Gold Exchange or the LBMA or anywhere else. But in any event, it does highlight, though, that China wants to, I would say, less emphasize gold and more emphasize the yuan, but that the gold is kind of a shiny metal object, so to speak, to get you interested. Say, look, if you're not totally comfortable with the yuan, you always can convert it. But that's always the case anyway, because there's nothing stopping anyone from buying gold. And what I'm confused about is why these Western and even Eastern banks aren't buying it. And I think one of the reasons is if you look at the World Gold Council, they occasionally publish this. GATA publishes it too. There are agreements amongst central banks not to engage in gold buying and selling. I think that's the reason.
Well, but we don't know that they're not acquiring gold.
Exactly.
Because it could be exactly like what China's doing. I mean, China's probably educated a lot of the countries, these smaller stand countries and all the, quote, heartland, end quote, nations. They've probably all been educated on how to acquire gold off book, and this is how you're going to roll it up when the time comes. You're going to roll up this gold into your central bank or put it at the sovereign level, but you don't have to have it at the sovereign level at this point.
Right. So you saw what we've talked about. I cover Kazakhstan every month, and I've noted that they've added gold 58 months in a row.
Yes.
There's another stand, Kyrgyzstan. I think I'm pronouncing it correctly. Their central banker, and I said about a year ago, maybe less, I think I've sent you this article, that he wants every citizen in his country to own 1 ounce of gold.
Yeah.
So you're right.
Because they're in Kyrgyzstan, they are currently operating on a barter system. I mean, they are literally...
They trade cattle, and he says, "Why don't you trade gold?" What's with this cattle trading? It's very, very cumbersome.
Right, and he wants everybody. Did you say 600 ounces? I think that was his goal. It's some ridiculous number. I mean, it's
a small country, but it would be a substantial amount of just because it's a small country with a few million people. It's still a large amount of people. And we talked about this before. Is the even if just 1% of the U.S. labor force were to purchase physical metals, you'd see a dramatic increase in the physical buying that would swamp, the mining production that you currently have. So that's another reason. If you think about it, they have to create these paper alternatives to increase the supply of people who may wish to own gold or silver. And if they're satisfied with an ETF or a paper contract, then they in effect have created 10x, 20x the supply of gold and silver.
Yep. And it's all an illusion. Blips on a screen. That's all that it is.
So that gold and silver is no different than your dollars.
Right.
because it's said you could just put an S next to it, and that means silver. You could put a G next to it, it means gold. You could put a D next to it, it means dollar. So what?
Oh,
But people
well,
believe it. You see, that's the
they
thing.
buy the illusion. They think the
If they,
illusion is real.
yep. And that works until, as in the story of the Emperor's New Clothes, when someone looks at it and says, "Well, wait, there's nothing there." They go, "Shh, of course there is." And then finally, everyone realizes there's nothing there. But I don't have much hope that that's going to happen, because I believe that people are in the digital illusion past their eyeballs.
You very well may be right.
I mean, I
and it
people
makes
say
it.
one day unsustainable, and I'm saying, how obvious does it have to get?
Yeah, I don't know. I don't know how much more obvious it could be, but I don't
Because
know.
people say, oh, people are going to wake up, and I'm like, what's going to wake them up? I mean, it's like, what are they going to see that they can't see already?
It's a good
They
question.
don't want to see it,
They
and
don't want to see it. That's the problem.
central banks don't want to restrain themselves by actualities. Think about what the SDR is. Oh, we don't have enough gold to do international trade settlement. This is during the gold standard under Bretton Woods in 1969. So rather than raise the price of gold, why don't we just create another fiat illusion and say they're called SDRs, not backed by the currencies that are included in the basket? And now we have more liquidity in the market. Problem solved. And they all look at each other and they say, yeah, that's good. That works.
That's great. Another IOU.
QE. Oh, we can't cover these debts. Of course we can. Just go over there and add a few zeros over there and print up some more money, and we're good to go. And then they say, well, it worked.
It worked.
That's the problem. We're 10 years on, and all these people are saying it worked.
Last thing, then we're
do
going to
more.
get. Last thing, then we're going to get out of here, and that's
All right.
the what you just said. If you look at what's happened over the last 10 years, since the 2008 implosion, how the laws have changed, how there's been a complete deterioration of the rule of law, and how there's now blatant, in broad daylight, two sets of laws. There's laws for the people like you and me, and then there's no laws for the banking and ruling class, period. If there were, we would have some serious investigations going on, but there's not. So it comes back to the question that I keep asking, and I'm going to pound this home until people begin to realize and to start looking realistically. Where is Seth Rich? What happened to Seth Rich? And what type of government do you think that we have? Period. Because that's what it comes down to. And if you think that, and if people think or believe that some type of digital blip on a screen is going to save them from the people that create digital blips on a screen, well, not sure that that's going to work. It might, but I think that physical hard assets that are by nature decentralized, by nature anonymous, I think that that's going to give us our best chance. I'm not saying that it's going to solve the problems. I'm not going to say that it's going to work. I'm just saying that that is what I see as giving us the best opportunity to break the backs of these criminals. What do you think?
Well, there's two ways of looking at it. You could say that's the one way, and you're going to have lower participation, or the other is to do the battle on the digital on the digital battleground. And generally, when you're playing on someone else's field, you don't have the home field advantage. You could win, but you could also lose because they control the referees. They control what the field is like. So yeah, it's difficult to because you're playing on the internet.
Right.
They control the points of entrance. They control it's not
everything.
The same as playing a different game. if you move the battle off the field, it's different. You have
Completely.
a different way. So you don't like the conversation and you're not going to win the argument. You just change the subject. That might be your better option. But the issue, though, is more people are willing to be on the battlefield and take their swings there.
Well, I hope that I don't really care how we win. I just want to win. I'm tired of losing. I'm tired of being a slave to these criminals. I really am. I'm sick of it. Sick of it. I'm sick of people. I'm sick of there being laws that are foisted upon my family and my life that don't apply to the people that are far more criminal than I could ever even imagine to be. So.
Yeah, that is something that is a confidence loser. People need to have confidence not only in their monetary and financial systems, but they need to have confidence in the rule of law. That's what society is based on.
Yep, those are the rules. So
play by them. Doesn't mean you'll succeed, but it means you won't be penalized, and you won't have other people rewarded for breaking rules.
Exactly. And well, all right. Well, Lewis, it's always a pleasure. We'll pick it up again in 2 or 3 weeks and see where we're at and take it from there. What do you think?
Excellent, Rory. Talk to you soon.
All right, buddy.